In today's video, we are going to look at the rise of decentralized finance. DeFi has become increasingly popular day by day because of the use cases and projects innovating in this space at a rapid rate. Cryptocurrencies inherently operate as a financial communication tool at the bedrock, right? Bitcoin is a use case of sending a cryptographic message from one peer to the next, and blockchain technology was forged into our world. And with the iteration of blockchain technology and Bitcoin, we have seen other protocols like Ethereum innovate a use case of that technology expressed differently in the form of smart contracts. And because of smart contracts, where not only can you send cryptocurrency, cryptographic text, and other information housed within a block, you can also create contracts between two peers that self-execute when certain parameters are met. So this isn't a video on smart contracts. It's going to be a video about DeFi, and specifically one area of DeFi that I am going to pay attention to here today. So the most popular DeFi applications we see right now today are going to be exchanges, so decentralized exchanges. And DEXs are different, obviously, than centralized exchanges in many ways. One, they're not operated by a centralized entity, and the capital in the exchange is not supplied by another centralized entity, like a bank. So peers and thousands of individuals provide their money, provide their liquidity, liquidity providing, they provide their capital into the decentralized exchange, and then you have all of that capital pulled together so that users can come in and swap and make trades, buy, sell, invest, take advantage of arbitrage, all from a decentralized network. Unlike a centralized exchange where all the money is supplied by a bank, centralized bank, decentralized exchange is owned and operated by the founders, and it operates in that way. So then traders can come in, trade, swap, the same kind of a thing. It's just the operations are different. So in a decentralized exchange, you can vote on the way the exchange is going to turn on or off a fee switch, or discuss a new project being listed. And that's different because on the centralized exchange, you don't have any say. You're not invited to the conversation. So it's really unique and different. The focus of DeFi we're going to talk about today, because I have videos that have already talked about DEXs, multiple DEXs. Today, we're going to focus on another aspect of money lending that you might be overlooking. You might be overlooking the opportunity of a money lending and borrowing DeFi use case. And that is a major application forming. It's already been on the scene with Ethereum. If you check out my video on hacks and rug pulls, scams, I highly recommend you look at that video because I'm talking about some higher risks that you should be aware of when you are choosing a blockchain and a layer 2 token built on that blockchain that could be compromised and vulnerable because the code isn't good, the tech isn't good, the team isn't good. So we've seen a lot of money lending, DeFi, and the Ethereum side of things. And what's exciting to me is that you're now starting to see these applications in the Cardano ecosystem. And so this channel is modeled with the Cardano blockchain. I use Cardano as the model for this channel, for my website, Crypto Fluency. Cardano is the layer 1 blockchain that we model. And then there are obviously layer 2s that are built upon that blockchain. So a lot comes down to the blockchain you select, the layer one that you select. And there are several great ones out there. This is not financial advice. This is just my take, my experience using Cardano as the model for all of these use cases. And today we're going to look at an extremely amazing layer two money lending and borrowing platform that had launched in February after a tremendous amount of hype for its launch. Okay. So that project is Liqwid Finance. And without further ado, we're going to go to their website. We're going to check out their docs. And yes, I've participated not only in staking on the platform, but also supplying liquidity and then borrowing liquidity. So you have to understand all of this stuff. Now, I took months and months. I took actually those 3 months of time, February to May, February, March, April, May, almost 4 months now. Researched, read the white paper a billion times, saw everything I could see about the team. I participated with my Liqwid stake, and I've been voting on proposals and in paying attention to that process. I've been communicating in their Discord. Their Discord is responsive, okay? I open tickets, they respond. It's a positive experience. I don't bring anything to you in this channel that I haven't experienced, understood, audited myself, vetted, and interacted with, okay? So, Liqwid Finance. Here is the Liqwid Finance website, liquid.finance. Liqwid, a bold aquafarmer in Lovelace Land. Aquafarmers, by the way, are Liqwid Finance's NFTs that are going to have additional APY boosting rewards as a bonus. Where can you find those? You can go ahead and find them on the secondary marketplace, JPG Store, and check out the Aquafarmers. Yes, I've had Aquafarmers in my portfolio for almost a year, I would say, or maybe more. So I've vetted this team. I have researched and understood that this project was launching on the scene for quite some time. I'm excited to present this video for you because you might be overlooking Liqwid Finance, or you might have questions. You might see after this video that there could be a potential opportunity for you to see what these aquafarmers are all about, to see what the project has to offer, okay? And what can you do? You can earn interest on the assets you supply. You can borrow assets and build on the most hydrated liquidity protocol on Cardano. And as of today, there is $12,253,000 of value locked up, total value locked, TVL. We can lend, and QADA holders, which are ADA suppliers, earn both interest and Cardano staking rewards from the market's liquid staking properties. When you supply your ADA into the smart contract, you are going to get QADA as collateral, as a representation of your supply. And we're going to talk about that. Now, we're not going to learn everything there is to learn about Liqwid Finance during this video. It would take me 8 hours. This is to help you jumpstart your own investigation and due diligence into this project beyond perhaps what I might miss in this video. What else can we do other than lend? We can borrow. So you can borrow any asset supported by the protocol against your Q token balance instantly with no trading fees and no slippage. Their contracts are audited. In my hack scam rug pull video, I go through reasons why projects fall victim to this. They're trying to be fast, they're trying to be quick, they're trying to gather so much money all at once. And you know what they don't do? Most of them go through a rigorous audit process. If I'm considering to support a project, to get some tokens of a project, I am definitely looking to see if they're audited, if they went through the process. You know why? Because it takes time. Not only time, but it takes a lot of money for them to spend on audit, because who's auditing it? And you're going to be excited about the auditors. The audit companies that are out there, there's a lot of them. And then there are very highly respected audit groups out there. And one of the most respected groups are a part of auditing this protocol. You can stake your voting power, and staking rewards are enabled by staking the LQ. So when you're lending and borrowing right now, there will be a lot more tokens in the future, but right now it's ADA, Cardano, and there's actually a couple stable coins. We'll talk about it. But when you're participating in the governance decisions, and this protocol, different than all the other protocols I'm in as of right now, has the most voting proposals frequency that I've seen. So it's actually pretty exciting because you are invited to the table. You're literally able to see the proposals and vote on them and see the outcomes and see the iterations and the changes being made in real time. It's like you're sitting at the boardroom. It's really cool. So then they have these Aquafarmer NFTs. You could click this link and it'll take you right to the JPG store where the Aquafarmers are listed. And see, by holding one Aquafarmer and staking in the Liqwid DAO, your Liqwid tokens for governance, you are receiving a bonus on staking rewards. So these are some utilities that NFTs provide that I'm certain, because I have a tremendous amount of conversations with people about the cryptocurrency space, the NFT space, and no one really understands that there is this ability, this utility to stake these NFTs to get additional APY boosting as a reward. So jump into Cardano DeFi. The water is warm, and it talks about docs, it talks about governance. And then here are the partners. These are the auditors, Vacuum Labs, and they're partnered with them. M Labs, very reputable, respected groups right here. And you can join the Aquafarmer Cooperative. Again, if you are considering investing in cryptocurrency markets, for one, I don't think you should have 30, 40, 50 different projects. Two, if you are invested in a project, which I would keep under 5 to begin, maybe 10. Why? Because you should be involved in the social media, in the Discord. And if it gets to be 30, 40 projects you're invested in because you think you're building this wonderful portfolio and you're diversifying all over the place, how can you possibly keep track of everything that's going on? So every single project that you should consider, my suggestion would be to join their social media and ask them questions, say, hey, how you doing? I'm new to the community, and see if they respond. If they respond, great. Then you can feel good about them, because perhaps later on, when you do run into an issue and you need them to respond, you're going to want to understand that's even a reality. What I see people doing on these Discords especially is that they have been invested in a project for so long and they haven't joined the Discord. Something happens, like their computer needs to go through an upgrade, and all of a sudden they join the Discord and they're like frantically reaching out. Oh my God, what's going on here? Did I lose all my funds? No, maybe your computer needs an upgrade, but they're satisfied by the fact that the community is responding to them. Some of these communities do not respond. And if they're not responding, I'm not getting a token. Let's look into their docs. So if you click this button here, what's going to happen is you are going to go to this tab. This tab will pop up and open up right here. Introduction. We're not going to spend a lot of time on this because these are just the docs. It's not the white paper. And so it's very short, the documents. So it's a non-custodial liquidity protocol for lending and borrowing Cardano native assets. So non-custodial means it never takes custody of your funds. When you are borrowing and lending in a bank institution, let's say you're buying a house, you spend a certain amount on the down payment, 20% normally. Let's just say, for calculation's sake, that your house is $100,000. You're going to need to put down $20,000 cash. Sometimes you can get away with 10%. So let's just say you have to put down $10,000, 10%. But you give $10,000 to the bank. Not only do you give $10,000 to the bank that you're never going to get back, it's theirs, right? Obviously, you're paying for this house, but they have the deed to your house. So in a sense, they're going to pay and support The rest of the loan, they're going to cover 90% in this calculation because you put 10,000 down. If you put 20,000, it would be 80,000. They're going to cover all of that. They're going to pay the mortgage company who is selling that house, represented by the owner of the house. They're going to get that money, and then you're going to owe this bank $90,000 to get the deed for your house, to actually own the house. And so most mortgages are 30-year mortgages, 15 to 30-year mortgages. The entire time you're paying for this house, you live in, you think it's yours, but it really isn't yours. You don't have the deed to the house. And most people actually, what they do after 10 years or 15 years, they actually refinance the house for an additional 30-year mortgage. And people don't understand, you're giving up the custody of your house is not in your possession. Same thing with a car. You buy a car, you pay a percentage down for the car. The car company is going to look at lenders and banks that are going to lend you the rest of the money. They're going to pay for that car. They're going to get the title. You don't have the title for your car while you're financing it. Until you pay that car off over 5 years, however long, the custody of that title, ownership of the actual car, even though you have it and you're driving and you feel like it's yours, is really not in your possession. And if anything would ever happen to you, your job or what have you, whether it's a house or a car, and you cannot pay, you're defaulting on 3 months or more of loan payments, you're going to find that they're going to impound the car. They're just going to come and take the car. They're going to foreclose your house. They're going to take your house. And they can absolutely do that. And I've seen it a lot. Actually, some of these real estate guys out there, they look for foreclosures. They look for houses that the owners are defaulting on, specifically target those houses because they feel like they can get good deals because the banks just want to get their money back. So the difference here with these money lending decentralized protocols is that you're never giving the custody over to them. Even when you're supplying, really, they don't have possession of your assets entirely. And we're going to look at it. So suppliers, and look how it says, come on, man, join the Discord server. This is a positive sign when they're asking you, please join and talk to us. So suppliers are going to supply their money in a liquid smart contract. Let me bring this a little closer to you. Custody, escrow, and settlement, collateral assets deposited in smart contract for the protection of the supplier. And so borrowers are going to borrow that money, but they're going to have to put collateral into the smart contract that acts as insurance for these suppliers who then are guaranteed their supply back. We're going to look at how this ratio works. So there's Oracle price fees, collateral, liquidators, algorithmic interest rates, open APIs. A lot of this stuff could sound like another language because it is. We're looking at another language, another way to understand money lending and borrowing. And why are we looking at another language? Because since the beginning of money and borrowing and lending, it has been disadvantageous to the borrower and the supplier to some degree. The system isn't good. And so this is a fix. When you buy a house or a car, at the end of buying the house, after 30 years, if you calculate it and you're just making mortgage payments because of principal and interest, you're in fact paying the interest first before the principal. So it takes you so long to pay the interest off, and then you pay for the principal. And at the end, you're spending over 3 times the amount of money it would be to have that house. So if your house is $100,000, you're spending like $300,000 on the house. If your house is $300,000, it's more like $900,000. This is why we refinance. This is why we get caught in the rabbit hole and we chase the carrot on the stick for our whole life. The car's the same way. If your car's 25 grand, you're paying at least double for that car or more over the 5-year period that you are paying it off. And so this is how it makes it really difficult for human beings to get ahead in life because you need a car, you need a house. And then if you tack on credit cards, It's the same way where you're paying so much interest. So the way that this is done is extremely different. And it's a new language. It's something that we're going to, as a collective, have to consider and understand and learn. And my view is that the future is going to involve all kinds of financial advisors and education metrics to educate the public over time. And so let's go to the frequently asked questions. So what is Liqwid? Liqwid is a non-custodial liquidity market protocol where users participate directly with the protocol as suppliers and borrowers. So suppliers provide liquidity to a market to earn interest on their deposits, and borrowers are able to open perpetual loans in an over-collateralized manner. See, the beauty about Liqwid Finance right now, we're talking specifically about Liqwid Finance, is that they're perpetual loans, meaning there is no due date to the time where you need to actually satisfy the loan, like a 30-year mortgage for the house or a 5-year financing plan for the car, or you take out a loan from the bank. When I started my business in 2014, it was just like a service business, had nothing to do with cryptocurrency. I didn't even really understand what was happening at that time. I needed to take a loan out from the bank. And yeah, it's the same thing. You're paying double or sometimes in some cases triple for that loan, depending on how long it takes you to pay it back. I needed to pay that loan back in 5 years. There is no limit. So the loans are perpetual. And when you are getting that loan from the bank to open a business or to buy a car, to buy a house, it comes from that centralized entity. It comes from that bank. When you are getting a loan from Liqwid Finance, your loan is coming from a bunch of unique suppliers, just people like me and you who are participating in the protocol, supplying their liquidity because they want to earn interest on their deposits. And so borrowers are able to just open that loan. There's no credit check. There's no stringent process because it's all done through smart contracts. And the Cardano ecosystem and language, the Plutus smart contract, you can type in Plutus, Plutus, smart contracts up in your Google, and you will learn that Cardano's smart contract language, their Plutus smart contracts, are state of the art. It can't even be compared to the smart contracts on Ethereum. And again, check the hack video that I put out. Most of the compromises you're going to see in the DeFi system are going to be from that ecosystem because of the smart contract language. The Plutus smart contracts are amazing to deep dive yourself into. Again, join the server for more questions. You might have a specific question that I'm not even covering. Why would you choose Liqwid? The protocol is built on, I just said it, Cardano's Plutus smart contract language with a focus on security, performance, and software correctness. You should just check that out. The on-chain code base has undergone a security audit from third-party auditors, Vacuum Labs, prior to mainnet launch. Full audit report has been made publicly accessible. That's another thing. You can look at the entire report. I mean, is that transparent? How do you use it? To utilize the Liqwid protocol, you supplied your Cardano native asset, the amount, ADA, JED, or Shen. So JED is the over-collateralized stablecoin on the Cardano ecosystem. Shen is a different coin related to JED, and this is a whole nother deep dive you can get into, and it's incredible. JED and Shen are just such a revolutionary innovation as it relates to stablecoins. JED is far beyond any other stablecoin that is created in all of crypto. I'm saying that. I know that's a big statement. I'm saying it. That is huge. And JED uses Shen to help with the stabilization of JED. I could go into this and get down an hours long rabbit hole of this. And it's actually really another thing to get into. And again, if all this seems, wow, it's overwhelming, I have no time, I have a website, Crypto Fluency. Check it out. There is a blockchain blueprint course. It's free. You just sign your first name. Don't even have to put your first and last name. And you put your favorite email. You're going to get immediate access to my blockchain blueprint. It's a free course. It poured out information to you that I wish I had. I do have a fast track membership where you can sign, become one of my fast track members. That's a paid course, but you're going to get my update information every time I make a decision, every time I trade, every time I participate, position myself, get involved in a minting process with NFTs, what have you. I'm going to message my team members prior to that happening. And that feature could be enormous for you because it saves you the time. It saves you the time. You might be working. A lot of what goes on in this market, in this world of cryptocurrency, is time sensitive. So that is just offered out there for you because I get it. It's really a challenge to wrap your mind around every single thing that you need to understand to make a educated decision on this. This isn't financial advice. This is education. And so I wish I had this kind of content when I was beginning. And that's why this channel is born. That's why Crypto Fluency, we have the link right in the description, is born. More Cardano native assets are launching soon. And not only that, Liqwid Finance is going to go cross-chain because the best chain that is focused on interoperability is the layer 1 Cardano blockchain. It's another thing you can check out. Okay, so once you provide liquidity, you're going to earn interest, and it is just wonderful. What is the cost of using it? It just requires a very small transaction fee. When you look at what you need to supply with the gas fees on the Ethereum side, it is not good. Not as good as what you're finding here on the Cardano ecosystem. They're stored in the smart contract. And you can look at their white paper for more information where it goes into the deep dives of what these smart contracts are. Is there any risk? There's a risk in everything. So security with Liqwid is their main focus. And all of these tangible steps to minimize the risk have been completed prior to the release of Liqwid. So they've been building for several years, rigorously testing and breaking and trying to self-hack their own system, trying to break the system, and then using auditors to break and attack their system and compromise their system as best they can, rigorously, and with a test net, with other community peers, trying to break their system. And they do, and they find bugs, and they fix, and they find, and they fix, and they get to a point where they're comfortable to release this to the main net. So it's got this external audit. What is the Liqwid DAO token, LQ? If you type in LQ in CoinMarketCap or CoinGecko, you're going to find that's the Liqwid token. You can vote with this token. It's their governance token. Here's some additional information. You have the white paper, you have the Discord server, and I definitely recommend you check them out. Let's go ahead and look at supply and earning. How do I supply? You're going to navigate to the assets, you're going to click supply, and we're going to go through this. How much will you earn? The interest is variable. The money you're going to be getting as an APY is going to be variable depending on how much supply is being supplied, how much asset is being supplied. So it's a variable rate. It's also a variable rate on how much you're going to have to pay back. Is there a minimum or maximum? Nope. No minimum, no maximum. Can I borrow at a fixed rate? No, the Liqwid protocol only supports borrowing with variable interest rates. How do I withdraw my assets? It tells you in great detail how to navigate to the app, click your supplies, click withdraw. Immediately you can withdraw your assets at any time. Can I opt out my assets from being used as collateral? Basically, what this is just saying is when you supply your assets to the application, you can't say, I don't want anybody to borrow them. Because when you're supplying your assets into the money and lending protocol, that is exactly why you're doing it, so that people can borrow it. So if someone's borrowing your assets and you're thinking, if I supply my asset and somebody's borrowing it, then I won't be able to get it out. No, that's not the case. Why? Because you're pulled in with a tremendous amount of other people, and you can take your asset out at any time. And it goes into the borrowing. How much can I borrow? We're going to talk about that. It's going to depend on how much you supply. What assets do I need to repay? So you must repay your full loan in the asset you borrowed. For example, if you borrow 100 ADA, you will have to pay 100 ADA plus the interest incurred when you repay the loan. We're going to look at this with the app. You're going to see it clearly. It just goes extremely into the nitty-gritty of everything. It doesn't leave anything opaque. blurry for you. They're facing and confronting all of the questions and all the situations that they've seen in the Ethereum market space is based on the borrowing rate. This is just actually like very natural to understand. What is the health factor? So this is something that is unique to money lending and borrowing. So the health factor is a number which calculates the safety of your collateral assets compared to your borrowed assets. So here's the deal. You can't just go on this application and borrow money. You're going to have to supply collateral first to be able to borrow. You can't just say that you want a house with no money. And you might see commercials like get a house, no money down and all that. There's lots of strings attached to that. And that's why the real estate crash of 2008 was such a big deal, because they were just giving out these loans. And that's when Bitcoin really took off. That's when it began. As a counter to that crisis, this financial crisis, this financial system that we're in, Bitcoin came out at that time as a response. So no, you're going to have to give up something. You're going to pay a down payment, plus you're giving up the collateral, your house or your car. You can't just come to this protocol and take money without supplying something. And the way that it works here is that it's over collateralized loans. The real power of using one of these platforms is because perhaps you have acquired some cryptocurrency through a various assortment of ways. And because you've acquired that cryptocurrency, you want to hold it and go long. You want to hold the cryptocurrency. You don't want to sell it because it would take you out of your position, especially in a time zone when perhaps the markets could go up and that cryptocurrency value would increase. So instead of selling your assets because you might need that liquidity in the real world to live your life, you can lock that liquidity. You can supply that liquidity into a project like Liqwid and then get a loan out for that, and then use that loan out in the real world. And then over time, pay that back. Once you do, you're going to unlock and get back all that liquidity that you put in there that you didn't sell. All right. Now there's a lot of strategies to this. And maybe in the next video I do on this topic, I talk about my strategies. Again, if you're a part of my fast track though, I go into this every week where I really disclose a lot of my strategies, and you can ask me any question that you want and I can reveal my strategies, because there's lots of strategies on how to leverage. They call it leverage lending is a topic of conversation, but I do it differently because again, this isn't financial advice. There's a lot of risk. And so yes, I put these videos out almost daily on different sorts of topics, but there's so much that happens in between. There's so much that happens that I'm not talking about on these videos. So if you want that info, check that website out. All right, sign up, send me an email. The health factor is something that you're going to think about for a while before you understand it. It probably took me a month to really understand with the health factor of 1 or below, or the health factor of 2. And we're going to look at the app and I'm going to show you in real time. So what happens if the health factor is reduced? If the health factor is reduced, then a liquidation event occurs and they're able, Liqwid Finance, to take some of your assets that you supply, use a portion of that to repay a portion of the loan. Just if you didn't pay your mortgage for a couple months, they're going to send you warnings. They're going to send you letters. They're going to call you, but eventually they're going to foreclose your house and take the house back from you. And so just like that, once your health factor gets out of balance, you are expected to start to repay that loan. And if you don't, they're able to take portion of your asset that you supplied and repay the loan. But they will give you warnings, and there's a monitoring process. There's a process to monitor this correctly, or do it in such a way where your health factor is extremely high. See, when people are using these money lending platforms, from what I see, is they're doing it with too much risk at stake, meaning they're supplying a certain amount of assets and then borrowing as much as they possibly can according to that collateral. And I would suggest perhaps as you start, do it very slow with an insignificant amount, and then borrow like way less. If you supply $100, you can healthily, with your health factor, take out a loan for $50. So it's an over collateralized loan. So you're going to have to supply $100 to get a $50 loan. It's in a cryptocurrency. So if you have $10,000 worth of ADA, let's say, because you got ADA last year and it was cheap and you have 10,000 ADA, and right now you want a loan, you're going to be able to supply your $10,000 worth of ADA and you're going to get a $5,000 loan. Now, I think you can take up to 75% of that supply. If you supply $10,000, you can take out $7,000. But if the price of ADA drops by 10%, that $10,000 worth of ADA is no longer going to be worth the $10,000. It's going to be worth less. And so there is going to be a liquidation event that occurs at that time. And we're going to get into it. I'm just showing you this because you can look at these docs, and I suggest you do. How do you repay the loan? It's very simple. How do you avoid liquidation? Maintaining a strong health factor avoids the risk. By reaching the liquidation threshold would trigger collateral liquidations like we just talked about, where they would start to be able to take a portion of your supply and repay the loan. But you can avoid this by repaying your loan or depositing more collateral into your assets. Of these two available options to safely manage your borrow position, repaying the loan would increase your health factor more. So there's two ways that you can avoid that liquidation event from happening where they would have to manually begin to repay. You could go in and repay, or you can go in and supply more. You can add to the 10,000 ADA that you have. So you put in another 1,000 ADA on the supply side, and that could also increase your health factor. But they're telling you here that if you're going to choose those two options, it will probably be better for you to take that $1,000 and actually repay the loan, because it's going to increase your health factor by more of a percentage. So they're even telling you this here. And I get that this probably sounds like another language. And then there's technical FAQs if this wasn't as technical enough. So we're not going to look into it. It's good. You might be like, what is the Q token explanation? You're going to find that information out here. And not only that, after I show you this and you see my position, you see how I did this in real time, you're going to have all these questions. There's this Liqwid app user guide, which if we scroll all the way down here, it's just the next thing up on the list, and it's going to give you play by play. It can't get any easier than this. It can't get any easier. It shows you exactly what to do, exactly how the protocol looks, exactly what's going on. It's so easy for you to understand. All right. That was the how do you supply. This is how you're now going to borrow. It's going to go through this for you in very good detail. It's going to show you every single thing that you're going to need to know. How do you unlock the collateral? How do you get your collateral back? How do you repay the loan? How do you redeem your Q tokens and withdraw your position entirely and move yourself out of the app? Like I said, very open. It goes into governance next. So I think this is a lot of the paper review, and now we're going to go into the app. If you click this link here, and they have these links all over the place, app@liquidfinance.com, or if you're on their website, we're going back on the website and just click, go to the app, you're going to go here. You're going to come to this, and you can toggle. I have it on dark mode. You can toggle it light to dark. This is their app, and it has a little bar. Please make sure you're visiting app@Liqwid Finance. Bookmark it to be safe, because you got to be aware of people creating false little websites that are a little different or something like that. You want to make sure you click the links from their website, from their document list, because it's going to bring you directly to the official Liqwid application. If I go ahead and disconnect the wallet, this is exactly what you'll get to. You're going to get to this. It says Liqwid up there, dashboard governance. Here are proposals. Look, this was a proposal. Look at this, May 20th, May 20th, May 14th, May 8th. As I said in the document review, there are so many proposals and so much opportunity for you to get involved. Liquidation, it talks about the user guide, which actually brings you right directly to the documents that we were looking at from their app. It talks about the rewards, and the dashboard. And to do anything, you're going to have to connect your wallet. So we'll go ahead and reconnect. It accepts Eternal, Giro, Nami, Flint, and there'll probably be more like Lace wallets in the future. And so once you connect your wallet and you sign, and I've already signed into this, it's going to probably ask you to sign so that Liqwid can understand what's in your wallet. So actually, right now, I have a balance. There's 36,000 ADA in my wallet that I could still supply. I don't have any JED or any Shen, and it's only going to acknowledge the assets that relate to what Liqwid has available. And once it adds another token or I add Shen to my wallet, then it would say, oh, you have this amount to supply. And so remember, you cannot borrow unless you supply. What I have done is I have supplied 150,000 ADA, and it's the equivalent now of 54,876. Now, when I supplied this, it was 55,000 something. So the price of ADA dropped. It's a very small amount. And so this is lowering. It is always going to keep you updated into the price. That just switched in real time. There's an oracle that's tracking the price in real time. And for this 150,000 ADA, which was around $55,000, I was then able to borrow, or I decided to borrow, half of $55,000, which was 27,500 exactly. But because of this interest, I now have to pay $25,522 to pay this off. And when did I do this? Yesterday for you here. So what is the health factor? So the liquidation value, when your health factor gets below one or below, that is when they will come in here and be able to liquidate a little bit of this loan. They're going to be able to liquidate this loan. And a borrow limit, once it gets to 1.06, this is when you should really be concerned to add more liquidity to either supply here or to repay the loan. So remember those two options when we looked at the documents? To bring your health factor back up, you can either supply more asset, like 1,000 more ADA or whatever, or you can repay. And they suggest that you could repay because it will give you more of a health factor. You're repaying the loan. We don't have JED or Shen. We're only supplying with ADA and your health factor here. All right. And so how do you see your health factor? Now, when I first did this yesterday, it was 1.6. In their documents, when you really review the documents, and I suggest you do, in detail and look at the white paper, they suggest a health factor of 2 or above would be better. My health factor was 1.6. So when you're supplying asset and you're then borrowing at a 50% ratio to your supply, it gave me a 1.6 health factor. And then actually, when I supplied, originally, my supply was up here in my supply balance. And you can just supply on this market without borrowing. That's something huge that you must understand. If you supplied, you don't need to borrow. But when you do borrow, your supply goes into the smart contract, and you can see it here. And then your borrow balance is the balance that you're going to see up here. Let's go look at this for a second. So I can repay, and my health factor, I told you, was 1.6 when I did this loan yesterday. And here's QADA that was given to me as a response to my supply, acts as a representation of the collateral that I locked in. When you supply ADA, you're going to get QADA in return. And QADA is what you have as a representation of the amount of asset that you have to supply for when you want to borrow. When I began the borrow process, it asks you how much QADA do you want to give up for collateral. And because I was doing half of the amount, I clicked the max button and I put the max amount of QADA into the supply side. And that gave me a 1.6 health factor. But because Cardano has gone from 37 cents to 36 cents, the health factor decreased slightly here. Now, if ADA goes down to 25 cents, which hopefully it won't, I'm going to have to consider my options and begin to bring in some ADA to repay this loan. That's why you never want to put in all of what you have. If you just have 100,000 ADA, or if you just have 1,000 ADA or 10,000 ADA or whatever the ADA is, or you don't have any ADA and you're just buying ADA recently, if you're just getting into the market and you're trying to get into the DeFi space, I would definitely suggest not putting in all of it, because what happens if you need to put in more? So you need to have some ADA in reserve to help. And again, I go through my strategies in the Fast Track membership. I go through the strategies, or you can ask me strategy type talk. So here's my remaining debt. I could pay this today if I wanted to and get out right now. My understanding is that what if Cardano goes to 40 cents? So that's going to mean that my supply, my 150,000 ADA over here, is going to be worth more than $50,000. So I have a calculator here. You can do this calculator also. If 150,000 ADA times 40 cents is going to be worth $60,000. That's going to increase my health factor actually automatically. So my health factor is lower than 1.6, which it was yesterday, by like a fraction. But my health factor will go up probably to like 1.7, 1.8. And if it goes to 50 cents or what have you, this might get to 2. You have to consider that you have to monitor this. You are the person monitoring. You're the one taking responsibility for it. And so this is an example of a significant amount of participation in this app. I want you to understand that I'm not presenting something to you that I have not gone through a rigorous process of research, analysis, audit, and vetting. I want you to understand that when I bring you these videos, I'm not just throwing something out into the wind. You should not either. I hope that you are not compelled to take part in Liqwid Finance because you're watching this video. I hope that you're compelled to research money lending in the cryptocurrency markets overall and see if you don't come to find yourself in the Cardano ecosystem by yourself. That's what the road led me towards. That's just a personal journey of mine. I did start off in the Ethereum space. I did start off in these other blockchains and other layer ones. And all roads led me to Cardano. Their scientific peer-reviewed papers, their stringent, amazing journey, their languages, Plotus, smart contract, they have Marlowe, there is Atala Prism, there are other layer 2 formations, their Lace wallet, their Daedalus wallet, their Hydra head. Go down Cardano's rabbit hole and understand the significant amount of work they're doing for crypto overall. And Liqwid Finance is a project right now live where you can look at the possibility, the opportunity. You go into their tokenomics. One thing I love about Liqwid Finance is their tokenomics. We're not getting into tokenomics with Liqwid right now. I will do follow-up videos with Liqwid. I will show you how this goes on through a volatile moment and take some of the confusion away for you. And maybe the next time I need to do this, although this stuff is very time sensitive, I will try to do some of this stuff in real time with the video, but often I don't have the time to set up the video and the microphone and what have you in real time. So I just take the action. But if you're a part of my Fast Track membership, I do send out messages right before I do it in real time. Okay, so you'll actually understand. I have weekly private videos where we do AMA discussion. And so here is the Liqwid protocol. And let's say you just want to invest in Liqwid. If you believe in Liqwid, you believe that the tokenomics are good, you believe that there could be potential for Liqwid Finance as an overall project that you want to support, you don't have to supply. You don't have to get ADA and supply because you might just get some Liqwid. And if you're doing that, you can support in the governance aspect. That is what I've been a part of with Liqwid since the beginning. I just supplied yesterday after all this time. So if I refresh the page and we go into, this is the governance aspect where you can look at proposals and new ones are here. And then this is my staked balance. And this is the balance that I have in my wallet, 0.7, but I just staked a round amount. And I began staking in the very beginning when this project started. And so I was only interacting with Liqwid Finance in the governance aspect since the beginning. So this is all that I would see. My dashboard said nothing. So here I am, I stake 920 of the tokens. Check out Liqwid's tokenomics. I can unstake this at any time. I can add to this position. I can unstake whenever I want, and these will come right back to my wallet. Or you can delegate this to a proposal. Once there is a proposal proposed, I am going to need to stake this into a proposal. When a new proposal pops up, I will do another video to show you in real time the process of what that looks like to stake, and then how that opens up your ability to vote, and then you can take part in that vote process. So you can vote on each proposal yourself or delegate voting to a third party. You can actually delegate your voting power to a third party who will vote for you. And that's very transparent. It's a decentralized ecosystem, the Cardano ecosystem. They are paving and blazing the trail for true decentralization and transparency as a cryptocurrency ecosystem overall, that all these layer twos that are building on the Cardano ecosystem, there are thousands, but the ones that I'm highlighting, the ones that I'm showing on my videos, are ones that are really taking the baton of what Cardano has paved and blazed as far as their model of decentralization, their model of governance. Cardano began with its model of governance and the catalyst system, and it continues to show by leadership, by example. Cardano, I'm talking about Cardano, ADA, the ecosystem of Cardano, continues to show through leadership and example the way in which you can use their technology. So it sets the bar high for these layer 2 projects like Liqwid Finance to realize what they can do also. Because what Cardano can achieve, if you're building on Cardano, you can achieve the same style of governance, the same integrity of their technology, right? The Plutus smart contracts. You can take advantage of that security and representation that Cardano has paved. So I hope you got some value out of this. You might be confused, and that's okay. Part of this is to stretch your mind, to stretch your imagination, to confuse you a little bit. It's natural. I don't know every single thing about this either, but what I can say is that you might now know a little bit more than you did before watching this video. And that's important to me, okay? See, sometimes the confusion of new language understanding, although it's confusing, gives you some more understanding. So you might be confused, but you still understand a little more. You've gotten a little bit more understanding. And that's my attempt and my hope here, because if you continue to go back and challenge yourself to even get confused even more, you're going to understand more. And the confusion is going to start lessening, and your understanding is going to start growing. And with growth of understanding is growth of knowledge. And that knowledge is far better to serve you than confusion when you're thinking about participating in the cryptocurrency market overall, or the Cardano ecosystem. You want to approach this with knowledge, not with confusion. Okay, and with that, I wish you all the best. Stay strong, stay healthy, always be prepared, and we'll see you in the next video soon.